Right, well, we are standing by any moment to get the latest quarterly update on the wage price index data. This is the figure we're going to, of course, compare to inflation. Let's bring in our business reporter, Edward Boyd. Economists predicting wages to rise at about 2.5% over 12 months. So the key factor here is that's nowhere near either headline inflation or even underlying inflation.
Yeah, exactly, Tom. Look, headline inflation's at 5.1%, and the Reserve Bank of Australia is expecting headline inflation to pick up later this year to get to 6% around December and potentially go higher next year as well. So wage expectations today, this is for the March quarter, the expectation is wages will grow about 0.8% over the 3 months to March, and over the course of the 12 months to March, economists believe wages will go up about 2.5%. So that's half of what headline inflation is. So when you look around the economy right now, the cost of living keeps getting more higher and higher and more difficult. People really need to start getting some more pay rises to keep up with that cost of living. And right now, wages are just not keeping up with inflation. So we should be getting the figures from the Bureau of Statistics any minute. I think in the next 20 or 30 odd seconds, we'll get the numbers right up here, Tom. Okay, figures have just come out now. Sorry, Tom. We've got quarterly increase of 0.7%. And I'm just refreshing my screen, 2.4% annual wage increase. So wages have actually gone up by 2.4% over the course of the year. That's below the expectations from economists. So it's slightly weaker than expected wage growth numbers here for our economy. So this is, a bit of a surprise. Economists were expecting wage growth to be higher, and there are even predictions it could be jumping even further still, but that hasn't happened. So wage price index is up 2.4% for the 12 months to the end of March. So a bit of a disappointing figure today.
We'll get, I'm sure, plenty of political reaction to that. Just noting the annualised rate was 2.3% at the last quarter, so you're seeing that almost exactly the same. In other words, so far we've seen inflation really take off, obviously, and wages haven't followed. Now, we know wages can be much more of a lag factor. First of all, you have, of course, an annual decision on the minimum wage, Ed, and how that feeds into things. So, that's not going to react quickly to inflation. The decision on that's looming, but also a lot of agreements and so on between employers and employees. If they're done annually, every 2 years sometimes, the lag factor is there. They can't catch up quickly.
Yeah, look, at the December quarter last year, there was a couple of enterprise agreements that came into place, and that helped lift wages by that 2.3% figure that you're talking about. And clearly, wages haven't really gone anywhere over the previous quarter. So it is a bit of a disappointing number. The big thing today, Tom, was the Reserve Bank of Australia going to look at these wage price numbers very closely. And the expectation was if wages came in higher than expected, then the RBA would need to lift interest rates next month at the June meeting by 40 basis points. Now that wages have come in a bit weaker, then the Reserve Bank may not need to hike interest rates as much as by 40 basis points. So we know the cash rate's at 0.35%. Next month, it's probably looking like a 25 basis point lift. So not as big as expected, because obviously Reserve Bank needs to pick up the cash rate to push down inflation. If wages are creeping up with inflation, that puts more money into the economy and boosts inflation even more. So this is a little bit of a reprieve today for the Reserve Bank. You can see on the screen there.
Yeah, go ahead, Ed, sorry.
Oh, sorry, I was just going to say, Tom, you can see on the screen there, this is the wage price index over the last 8 years, and it's pretty much been around that 2.4% figure for that whole period of time, apart from in 2020 when it dipped into the sort of 1.4% mark. So you can see here at the last line there is March, and you can see it's only really creeped up 2.4%. So wages have hardly gone anywhere over the last 8 years in this country.
So, and that's been sort of lower than expected. Real wage increases have been interesting as well, because we have had lower inflation than normal until now. So this is why the rubber's hitting the road on this. And we've had actual real wage increases since 2013. They've been hovering around the 1%. That's how much those average a year. Now, that's not going to help people a lot, but real wages were actually increasing until 2021. And the problem right now is we've got a forecast of 3 years of wages going backwards, and often by more than 1%. And the double whammy to that, I guess, is, yes, we can talk about why the underlying figure is used as a more reliable one, stripping out one-off costs. But look at petrol, Ed. You can't tell people, oh, don't worry about the price of petrol. It's volatile. They know it's very high right now, and there's no guarantee it gets lower. So this is the problem in the real world versus sort of, debating underlying and headline inflation figures.
Absolutely. Look, the cost of living continues to go up. The price of petrol, it's around $2.20 a litre for unleaded at the moment. That's sky high for your average family. Price of food, goods and services is all increasing, and companies, to deal with rising inflation, they lift their prices. So things are getting worse in our economy. You can see their annual inflation at 5.1% right now. So this is a bit of a tough time for Australia's economy. We are going to get through it, though. Over the next couple of years, things are going to get better, and the Reserve Bank does believe inflation is going to start ticking down again, but that's not till mid-2023. So there's a couple more years to go. Also, Tom, I might say yesterday the Reserve Bank released their minutes from their May board meeting, and they talked about how rising inflation is becoming a bit of a problem for the economy and how it could lead to a further decrease in house prices. House prices could actually fall off more sharply than expected. So that's another risk that we're facing at the moment too.
Just briefly, tomorrow, of course, we have unemployment, so the government might not like this data today. Will they get unemployment with a 3 in front of it tomorrow?
The expectation is they will. So the unemployment rate supposedly should fall to 3.9% tomorrow. That's for the month of April. 30,000 jobs are expected to have been created, but this was the expectation for last month's numbers as well. And remember, unemployment stayed flat at 4% back then. So it's likely to go down, but it may still stay at 4% until later this year, when it's expected to get down to around 3.6%, Tom.
Ed Boyd, thank you. Breaking down the latest figures. That will be something that does affect the election campaign. So we'll get reaction. I'm sure we'll have political, not just leaders, but finance ministers, treasurers and so on stand up. So we'll take you through that.